My name is Mustafa, and this session is conducted in collaboration with Crest Venture Solutions. Crest Venture Solutions is a consulting company, and we provide business solutions specifically based on Microsoft Dynamics platform. For more information about our services, please go through our website provided in description of this video. Today, our aim is to explain VAT, which is being implemented in GCC, specifically in UAE. VAT will be effective in UAE from 1st of January 2018 and hopefully in other GCC countries. So the purpose of this session is to explain what is VAT and how it will be impacting your business. We will be going through a small presentation that will be helpful for the finance managers and accountants in UAE to understand how VAT is required to be accounted in books. So before going further, we need to understand the basics of VAT. VAT is charged on purchase and sales of goods. So that means whenever companies purchase goods or services, they need to pay for VAT, and whenever companies sells goods or services, they need to collect VAT. So VAT is charged by supplier on behalf of authorities or government. So it is an example of indirect taxation. There are two important concepts in VAT, that is input VAT and output VAT. In a transaction, input VAT is recorded by a purchaser, while output VAT is recorded by a seller. Difference of input VAT and output VAT is paid to authority. So let's take an example when we have a seller and a purchaser. So seller sells the goods for $1,000, and if VAT percentage is 5%, so the recorded VAT as an output VAT will be $50. On the same time, when the purchaser purchased goods for $1,000, the recorded input VAT will be $50. So for the seller, VAT is an output VAT, and for the purchaser, VAT is an input VAT. For the seller, output VAT is a payable, it's a liability, and for the purchaser, it's an asset, it's a receivable. So all your input VAT and output VAT will be calculated, and the difference is required to be collected or paid back to the authority. So let's take an example where we have a supply chain starting from the farmer and ends to the retail store. So the farmer is the one who produces cotton. This cotton is then sold to factory who then manufacture clothes. These clothes are then sold to retail store who sells close to the end consumers. In this example, all of them are registered for VAT, and the VAT percentage is 5%. So let's take an example where the sales is being done by the farmer. So farmer sells goods for $1,000 to the factory. The VAT collected by a farmer is $50, which is 5% of $1,000. At the same time, when factory purchasing goods from a farmer of $1,000 recorded an input VAT of $50. If you look at the farmer has an input VAT of 0. That means that farmer purchased something from an unregistered VAT supplier. So when you are purchasing something from an unregistered VAT supplier, then that means your supplier will not charge VAT from you, and you don't need to record an input VAT. In that case, farmer only collected output VAT of $50, which is payable to the authority as a $50. If we look at the factory produces clothes and sold those clothes to the retail store. In that case, the sales for the factory is $1,200. As a factory, which is a VAT supplier, they charge $60 on the sales. So that means the input VAT and output VAT, the difference is $10, which is required to be payable to the government. Again, if we go further, the retail outlet is the one who sell clothes to the end consumers. In that case, the sale of $2,000 is being charged for the VAT. So the VAT being charged by the retail is $100. At the same time, the retail outlet paid $60 in input VAT when they purchase goods or clothes from the factory. So the difference of amount of 40 is required to be paid to the authority. If we look at all the calculations, starting from farmer, factory, and retail outlet, the total of the VAT makes 100. That's 50 plus 10 plus 40. This VAT is the end VAT which is being paid as a, at the time of the sale by the end consumer, because consumer will not we cannot claim VAT again from the government. So this is the amount which is being paid by the consumer. So in an example, you can see that the VAT is being collected on behalf of the authority, okay, and it's shifted to the next supply chain process. So I hope from this example you will know that how to charge VAT on input during the sales process, and how to claim those, how to calculate the VAT payable by the government. So if we look at the VAT for UAE, so it will be effective from 1st of January 2018. And as per the Ministry of Finance website, we are seeing that the registration for the corporate will open 3 months before the effective date. So we are expecting the effective date will be 1st October 2017. It's 2017, not 18. So VAT registration with Ministry of Finance is likely to start from 2017, 1st of October. As per the Ministry of Finance website, we are also seeing that the submission for the VAT, the calculation by the businesses, will be quarterly. So the first submission is likely to be start from 1st of April 2018. Um, Also, the VAT we are expecting to be, the submission will be online. Okay, so there needs to be some website, the login, the portal will be available where the ministry, where the registered users can go, can submit their transactions and submit their input VAT amount and output VAT amount, and they do the transactions. Maybe on the website a bill will be generated which will be required to settle through online, or maybe maybe payment through a bank. Um, while implementing for a VAT, you need to ensure that your certain business formats, or maybe just submit for business documentation, will be impacted, like for example, invoices, purchase orders, and sales receipts. So if you are a registered VAT, registered for VAT, so whenever you are giving away an invoice to your customer, or you're raising a purchase order for your vendor, you need to have certain terms and conditions and the amount of VAT on your documents. And as you've seen in the previous example, that consumer is the final one who pays for the entire VAT. So definitely we are expecting certain rules that your receipts need to show the amount of VAT. Also, we are seeing that certain companies will be exempted from VAT based on their annual turnover, but we are not sure what is the amount. That will be a limit for this exemption. So there are certain notes we need to take care. First thing is the VAT for UAE is still not finalized by the Ministry of Finance, so we are expecting changes in rules and the application. And we are also looking for certain information like how VAT will be impacted on bank charges and credit card statements, whether they will be charged, they will be exempted, and what will be the impact on purchase of fixed assets for commercial use or the personal use. For example, in certain European Union countries, if you look at the VAT calculation of fixed assets, some of them are open to claim the input VAT on the year of acquisition, and certain countries you look at it, are they based on depreciation. So we need to see how the fixed assets need to be accounted when the VAT is applied, and whether certain assets are exempted from the VAT calculation. We need to see. We also need to see how VAT will be impacted on import and export. Whether, like for example, when you're doing an import, we are expecting that you need, as a registered VAT customer, when you're importing something from China or USA or any other country, so VAT will be part of a duty that you need to pay to authority, and that can be claimed during a supply chain process, or there will be completely different application for import and export goods. And similarly, when you are exporting goods, like for example, if those are manufactured in UAE and you're exporting something to other country, so how your input and output VAT will be calculated. We need to see what kind of rules and regulation will be applied on those goods. As I said, exemption limits are likely to be available, so we are still waiting for the updates from, and we are also only relying on the Ministry of Finance website. So there are other sources available online, but we are only relying on the authentic source, that is Ministry of Finance. For the percentage rules and submission, it will definitely vary at the time of when the VAT is being implemented. So we need to wait for that. Our next sessions will be more targeted towards the accounting for the VAT, and we're gonna define like how, as per IS2, you need to account for these taxes, whether they are part of the cost or not. We're gonna discuss them, and if we get certain information about the fixed assets, we're gonna explain the accounting for the fixed asset as per IS16, and also, you need to take care because VAT will be effective from 1st January 2018. So you need to take certain steps to implement the VAT for your company. That may include like training, um, updating your business documents, like for example, invoices, purchase orders. You need to update your customer master. You need to configure your technology, maybe your ERP. You need to modify your sales receipts and all that. So definitely, you have to take certain steps. So what are those steps? We're going to cover in our next sessions, and we will also cover how Microsoft Dynamics AX or Microsoft Dynamics GP can be configured for VAT, and we are expecting um, that there are like that these are the standard solutions, and how these solutions need to be configured in order to support your VAT implementations. And since UAE is being first time implemented, so there is no localization available right now, but we are pretty much sure that the calculation will not that be complex, or will not that be difficult to manage. So VAT reporting and submission will be based on Ministry of Finance decision and the final ruling. Definitely, we're going to give some sessions on how this reporting and submission need to be done as soon as the information is available. What we are expecting right now is will be an online portal where the registered user for the corporate would like to be log in and in the period and provide the period for the VAT submission, provide the input tax collected and output tax collected, and the amount will be calculated by the website. And either you will have an option to pay or certainly amount online, or there may be some transaction generated online need to be paid through bank or some other payment service. And definitely there will be certain requirements to maintain the documentation, like for example, you might need to be maintain invoices for 2 years of time, so the ministry, whenever they require to perform an audit, so they can audit those documents, and they can see whether the submission was done correctly by the users. So we are still waiting for these kind of information. So once we receive the complete information, we're going to do some more sessions on that. If you have any questions and comments, please send us an email at info@crestventuresolutions.com. Visit our website, crestventuresolutions.com, or call us at the provided number. Thank you for your time, and take care. Bye bye.